Investing always involves uncertainty. That's the reality we must face. Some investments carry low risks, while others come with a higher chance of not turning out the way we'd like. But no investment is entirely risk-free. When purchasing a stock, it's important to consider both its potential upside and the risks of loss. Currently, people are divided over Nvidia, NVDA. After experiencing tremendous growth in recent years, becoming one of the largest companies globally by market value, some believe its success will continue through 2025. Others worry that the stock is overvalued and expect a downturn. Both sides present strong arguments, but there's no way to predict with certainty what will happen to Nvidia's stock in 2025. Could it soar even higher, or could it fall? Let's explore the likely outcomes, using history as a reference, to determine whether buying Nvidia stock today is a smart move for your portfolio. Investing never comes with absolute certainty. It's a tough lesson everyone has to learn at some point. Some options carry lower risks, while others have a higher chance of not working out, but no investment is entirely risk-free. When buying a stock, it's important to consider both its potential gains and the possibility of losses. Many observers are currently divided about Nvidia. It surged significantly in recent years and became one of the world's largest companies by market value. Some believe that its upward momentum will continue into 2025, while others predict a downturn, arguing that it's overvalued. Although each side may speak with confidence, nobody can guarantee Nvidia's future. Since there's a chance it could soar or decline, how likely is either outcome? By looking at historical trends, it may be possible to assess whether Nvidia faces a substantial drop in 2025 and to decide whether investing in its shares is a sensible move today. Before we begin, this video is not an investment advice and must do your own diligence. However, with my experience investing for years, the content from this video has a solid research foundation. Check our Patreon on the description below for an inside members-only access on what are the best buys now. We will also update you on what to sell for gains or to avoid losses. Subscribe to our channel so you will never miss out. Nvidia is one of the best-performing stocks in the last few decades. Shares of the stock are up 335,000% since going public in 1999, or a compound annual growth rate, CAGR, of 30%. However, there have been multiple stock crashes along the way. If we define a stock crash as a drawdown of 50% or more, Nvidia has gone through 4 stock crashes since going public: 2001, 2008, 2018, and most recently in 2022. Yes, it was just a few years ago that Nvidia was disliked by the investment community. Why such erratic behavior from investors? Well, for one, this is how markets tend to operate, even for the best businesses in the world. 2. Nvidia operates in the cyclical semiconductor industry. A cyclical industry is one with inconsistent end-market demand from customers, which causes volume fluctuations and volatility in the income statement. Semiconductors are cyclical because of inconsistent demand from computer chip buyers. You can see this in Nvidia's revenue chart, which has periodic dips and revenue declines. It has been 26 years since Nvidia has gone public. The stock has crashed in 4 of these years. So it's certainly possible that Nvidia's stock price will reverse and turn south in 2025. In fact, I think 2025 is a year that is more likely than most of a drop in stock price. Here's why. Nvidia has been one of the top-performing stocks over the past few decades. Since its public debut in 1999, its shares have risen by an astonishing 335,000%, which equals a compound annual growth rate, CAGR, of about 30%. Yet, along the way, the company has faced several significant stock crashes. Defining a stock crash as a drop of 50% or more, Nvidia has experienced 4 such crashes: in 2001, 2008, 2018, and the most recent one in 2022. In fact, just a few years ago, Nvidia was not a favorite among investors. Why such erratic behavior from the investment community? The answer lies in how markets tend to function, even for the most successful businesses. Additionally, Nvidia operates in the semiconductor industry, which is inherently cyclical. A cyclical industry experiences inconsistent demand from customers, leading to fluctuations in both production and revenue. The semiconductor sector is prone to fluctuations in demand from computer chip buyers, and this can be clearly seen in Nvidia's revenue chart, which displays periodic dips and declines. It has been 26 years since Nvidia went public, and in 4 of those years, the stock has faced significant crashes. Considering this track record, it's entirely possible that Nvidia's stock could experience another downturn in 2025. In fact, 2025 might just be the year when a drop in stock prices becomes more likely than in previous years. Here's why. Nvidia ranks among the top-performing stocks of the past few decades. Since it went public in 1999, its shares have climbed by an astonishing 335,000%. That translates to a compound annual growth rate of about 30%. Despite this impressive performance, the company has endured multiple periods when its stock price plunged significantly. If we define a crash as a decline of 50% or more, Nvidia has experienced 4 such events. In 2001, 2008, 2018, and again in 2022. Not too long ago, many investors held a negative view of the company. Why do we see this kind of roller coaster behavior? First, market volatility often affects even the best businesses. Second, Nvidia operates within the semiconductor industry, a sector known for cycles of inconsistent demand. Companies in this space face ups and downs in their sales and profits because end market needs can change quickly. These swings can be seen in how Nvidia's revenue has fluctuated over time. Nvidia has now been publicly traded for 26 years, experiencing 4 major crashes during that span. It remains entirely possible that its stock price could once again turn downward in 2025. In fact, there is reason to believe that 2025 might carry a higher than usual likelihood of a price drop. Here's what leads me to that conclusion. At the current stock price, Nvidia has a market capitalization of $3.5 trillion and a price-to-earnings ratio of 54, which is nearly double the average P/E ratio of the S&P 500, which stands at 30. While I believe Nvidia's revenue is likely to grow in the long run, contributing to earnings growth, it's important to note that the company is currently benefiting from a record operating margin. This margin will likely decrease once the current AI boom stabilizes. If supply in the semiconductor market eventually matches demand, which typically happens, Nvidia's prices and profit margins per chip are expected to decrease. This creates a double challenge for the company, with earnings facing downward pressure from both lower revenue and shrinking profit margins. Nvidia currently boasts a net income margin of 55%, which generates $63 billion in earnings from $113 billion in revenue. However, if revenue experiences a slowdown in 2025 and drops to $100 billion while profit margins decline to 40%, its net income would fall to $40 billion. If we compare this to Nvidia's $3.37 trillion market cap, we get a significantly high P/E ratio of 84. In this scenario, Nvidia's stock could fall further. So, while Nvidia is undoubtedly a great business, it's currently priced with extremely high expectations. There's a likely chance for a cyclical downturn in the near future. If you're interested in Nvidia, it's best to wait for the eventual downturn in the semiconductor market and buy then, rather than purchasing now when the stock is close to its peak. Give us a like if you like our video, subscribe, and ring the bell to never miss out. Check our Patreon for an inside look on what are the best buy and sell stocks every week.